Alright traders, I am back again with another video. And in this video, what we're going to be doing, we're going to be looking at not trading the breakout, alright? So basically trading the failure. I'm going to show you how to make profit off of trading the failure. So what this video is going to do is first I'm going to show you yesterday's trade setups and opportunities where I discussed how to trade the breakout zone. Okay, so there was a breakout zone on 8 trades. I'm going to show you 5 of these trades. Actually, there was a breakout zone on 7 trades, and we had 8 total trades, but 7 of the zones were tradable zones. Now, I'm going to show you what I said to do prior to today. So I'm going to show you what I said yesterday, and then you'll see where the market is today. And then I'll show you what I said yesterday, then you'll see where the market is today. So you'll be able to look at each pair we were talking about and how we traded it and why I said to trade it like I did. And it's going to show you how to trade these zones every time you get into a nice little range or where the market is not breaking out of a level. And if you would draw your zones, support and resistance zones, you want to draw zones. And then once you draw these zones, you're going to learn to trade what I call walk in the zone. So you're going to walk your trade up as high as you can or as low as you can, depending on the direction that you're going. And then what's going to happen is you're eliminating risk like this. All right. So that's what you're going to want to do. And this video is going to show you a little bit of what I talked about and what I showed traders. So let's get started with that. But before I do, real quick, this is my website, FX at One Glance. Guys, I currently have membership for you. If you want to become a member, learn how to trade Ichimoku, basic Ichimoku and advanced Ichimoku. All right, so we have a 1-month membership, which is $100 for each month. It's not a reoccurring fee. You can cancel or continue to be a member for the next month and the next and the next, or you could become a member for 1 year. To become a member for 1 year at our website. Okay, so that's what you got. And if you like to do that, just visit www.fxatOneglance.com. All right, so let's get started with this video. What I'm looking at is the Aussie Canadian dollar. Guys, trade these zones as they are currently. And what I tried to tell him, this zone is resistance here and it's resistance here. I don't care if this market closes up here. This zone is still resistance, because until this comes down and supports it, this is resistance. So as this goes up, as you could see, I'm trying to tell you that I would put a short order in here right now. Watch where this candle closes. Now, since this is the daily candle, what could happen is this, and you're going to take your trade off the table. And I can guarantee you, let me fix this zone, take it a little further. If I say today, put a short entry right there, because we trade these zones. So if you're looking at trading this to the upside, come see me in 3 days and see where this is. All right. And then tell me if you took that breakout trade and won, or took the trade that I said in the middle of the zone and made profit that way. You guys are probably like, this thing is going. Okay. I will put my entry right here, right now. Short. All right, so just watch that. That's one thing that I'm looking at. All right, traders. So we just looked at the Aussie CAD, and you saw the breakout attempt last night. Now, this is almost not 24 hours ago, but maybe a little more than, probably about 18 hours ago. Okay, so somewhere in there. But anyway, you see the breakout attempt that I showed last night. When the price was up here, I still was suggesting a trade down to the downside, because traders, what I'm going to do is continue to trade these support and resistance levels as they're supposed to be traded, because at resistance, I want to short. At support, I want to buy. No matter how high this gets, until it proves this is support, this is still resistance until it breaks through, closes, comes back, touches somewhere on here, whenever, then that'll prove that this level is support. Now, it has proven previously that it was support, but for the current market, it doesn't prove that it's support at that time anymore. And we don't know if it's going to even honor this level once it breaks through anymore. So therefore, I continue to trade this because most breakouts fail. Catching breakout trades is pretty risky. Like I said, I used to trade breakout trades, and catching them is very tough. So you could see I was trading from here. You can see each arrow that I traded this support and resistance level, because that's where I was trading, in between these support and resistance levels. And these are some of the best trades that you can get. All right, let's go through the next ones. So here's one. This is also the exact same thing I would have told you. I told him put an entry order right in the middle. Now this does look like it's really gonna go. I would still have a short entry right there. All right, trust me. Okay, so now we are looking at the current Aussie Swiss franc. As you just saw previously last night, again, way up here. Definitely looked like a breakout. But what did I tell you guys to do? Put your entry here for a short. All right, this market never proved that it was breaking out of this level. Just because you saw one candle that was way up here, it never closed up here. And the next thing you know, guys, it closes way down here. I had told you to put your entry here and your stop loss above this candle where it ended. Well, you probably wouldn't have been able to do that, but you could have definitely taken the entry and you would have been in profit now. It would have been a small profit, but 33 pips profit. Okay, so you could have gotten into that trade at this time. Let's see how far it went down, because we were talking about entering here, and overall it went down to about 50 pips. All right, and as high, how high did this thing go? Above the level. Let's see how high it went above the level. So roughly about 40 pips. So it's basically a 90 pip candle all in one day. And I told you to put your entry here, because we walk these zones, we trade these zones, and we always trade a zone. We want the market to come down to us or come up to us. We never want the market to come up to our trade if we're trading short. We want the market to come down to our trade if we're trading short. All right, so that's what we look at when we look at these zones here. Let's see what else failed and gave us an opportunity for a good trade. Same thing here. Now, I don't want to, this one, I don't want to enter. Let me see what that is. I can't use you, so I use you. I don't want to put my entry here right away, because I don't want to let the market trigger me and then try to go, and then do go higher for real. So what I would do is put it here, and then I would watch where that candle is. And the highest wick is this one right at the point. So I would think that the market would, if it's, let's say this candle stops right there, that's where I would put my stop loss. And then I would just watch the market. Okay, so another failed breakout, giving us an opportunity for another good trade. Again, look where this candle went. All right, and everyone thought this was a breakout. This is a bear trap. All these breakouts are just bear traps. Where not a bear trap. This is a bull trap, where bulls get caught going long and have no way out and have to hold or drop out. Hopefully by now they've dropped it out, because this market is probably coming down much lower. All right, so when I'm looking at this, there is a level that I'm looking at this bouncing off of for a trade to the upside, but currently it couldn't get through this level. But traders would take this breakout and another failed breakout all in the same day. So let's look at something else that's failed for breakout traders and has given us a great opportunity to make profit. Martin say, trade the market until it does different. Another good opportunity is Aussie dollar, US dollar. That thing is moving higher. I would put an entry order there. All right. I would put it right in the middle, and then watch how high that goes. Maybe it closes lower tonight or tomorrow, but this is a daily time frame, so I would put my stop loss a little higher. Once that candle closes, that's where I would put my stop loss a little above. I'm gonna show you my friend that I was showing today, one of my members, how he got stopped out right on the level and missed a giant trade, that over a 1,000 pip trade today. But I'm gonna show you why he should have caught it from the start without having to even worry about that. Just trading because doing what we do. Okay, I don't need Ichimoku on here. All right, so that's what I'm looking at, this zone holding. Now, if you're afraid of doing what I'm showing you, wait for your Williams. All right, and you could even go to your 4 hour and then catch your Williams close. So you'll catch the trade before the daily in a better spot. So if if you get a close below like this, boom, then you're going to take your trade at that close below wherever it ends up after the 4 hour candle that does close wherever it closes. All right, so if that 4 hour candle closes inside the zone but Williams is below the zone, you're going to be good. The thing is, this is what I wanted to show you. If you're above -20 and you're at a resistance level and you're above this, but you're not breaking this, you're not gonna break that. More than likely, your odds are low to break that. So I would wait, like, see this, you're probably not gonna see it go higher. So if you put a stop loss there, a little bit above, with your entry in the mid, you've just cut out, you have your stop this much of an entry. So you cut the risk in half almost, at least a third of it. All right, but now we dropped to the 4 hour. So back to the daily, this could end up here, and then the next candle bigger than this candle and close lower. So again, another failed breakout that really went up above the zone, because we have a good zone here. You could see how this zone was drawn, but we basically started drawing the wicks here. We already knew we had a level. Now we wanted to trade this level as high as this candle goes. We want to get to the top of the zone with our entry. All right, because now that gives us, we can eliminate a lot of risk by trading that way. All right, so we don't have to wait for the candle to come up here, close, and then drop down here. By the time it drops down here, you've got too far off the level to take a trade, because you got to have a technical stop loss. So basically your technical stop loss would be above this candle, but really, because you want to be up above the wicks of the candle. So that's what we're looking at right there. So let's see what else has failed for us that we can get an opportunity to trade. This Euro CAD bouncing off of the resistance level really wasn't a fake breakout, but we still trade the market as we would trade it as a resistance level. So we always want to short these high upper resistance levels, and we always want to buy these levels. Many times it's going to bounce off of these levels, but then there's going to be a time when it breaks. If I win 5 trades in here and lose 1, is that good? Or how about if I lose 5 and win 1? I probably can't cover what I've lost. So when this candle hit this level, first thing we do is go to that 4 hour. Now here you wouldn't have been able to. It didn't really work because the rejection was so big. All right. So catching this was a little bit different than the other ones that we have looked at, because we wanted the market to go a little bit inside the zone or above the zone so we could walk this zone up. That's how we trade these zones. We walk the zone. So every time a candle touches a zone or gets to the bottom of the zone, automatically when this candle gets to the bottom of the zone here, we're automatically doing this. First, we always started with an entry at this point when the market's coming down. Now, we don't let the market come down and trigger us. We wait for the market to get below us and we may have an entry here. But when the market gets all the way down to this point, we should be having an entry pretty much in the mid section, in the mid level here. Just like here, if you would see, you could have waited for this candle to close and then put an entry above this level and let it trigger you and then go higher. But if you would just wait for this candle, if it goes all the way down, now it went through the zone a little bit. At this point, you definitely can put your buy stop order there and your stop loss order. You want to see where the lowest wick is on that candle, and pretty much if you see where that is, you could put your stop loss. But if the market hasn't closed, then you already know that you have a good level, so you're not expecting the market to come much lower. So I start out with 2-3% of my account. Now I may not let it go that far, all right, depending, but I shouldn't even be triggered at this point yet. So once I get triggered here, and then if the market decides to drop that deep again, I'm probably gonna lose the trade. But you could see all these trades we just showed, guys. Why are you thinking about taking the breakout trade? All right, you should just trade these support and resistance levels in these sideways markets where you can really make a lot of money on the sideways market, because people always say the trend is your friend. It's your friend, but sometimes it's really not your friend, because when you expect it to trend, it doesn't trend and it flattens out. So you get into the trade, next thing you know, the market's flattened out. And you're like, oh my goodness. Then you get out of the trade, next thing you know, the market starts moving again. Then you don't know where the trend reverses. Then you're thinking a pullback is a correction is a trend change, and so forth. So it's a little bit tougher than people think. It's an easy saying to say the trend is your friend, but that range, that's your big buddy right there. So that's what I would go with. I like to trade those ranges, but yes, trends are very good if the market is going to continue to trend. Easy pullbacks and trades, but sometimes the market doesn't keep trending, pretty much like the times now, because we know that the market is kind of slow. The volume is gone because the holiday season. So probably starting back in January, you'll have a little more volume and probably a little more trending markets. All right. So hope this is helping you guys. Hope you see that it's good to trade support long, resistance short. And if you want to keep guessing the market or jumping on moves that look like they're moves, then you're going to be a loser, because let me show you real quick. ASU Swiss franc, look how high that went. You could be a loser on that depending on how fast that dropped. All that is a bear trap, a bull trap. Caught the bulls running, trying to catch up on there, and they lost. All right, bull trap. You guess in the market because you think it's going to break out, and then the next thing you know. So I never play that guessing game. I always go with what the market did before. What the market did before. All right. So what the market did before. What it did before, expect it here. What it did before, expect it here. Until it breaks. All right. Now here's another zone. You're going to have to make this on your EuroCAD zone. You can see my zone here based off of this high wick and this flat bodies, two flat bodies. The market gets up into here. If the market cannot break this level, but Williams percent R is staying above 20, but the market's not breaking, you're looking to go short. All right, so if the market comes up to the top, put an entry on the bottom and let it trigger you. If it goes higher, then you can move your entry even higher. But these are probably good trades for you, because actually, when I think about it, this is EuroCAD. Let me come back to that. I'm going to show you how I caught my last trade. This is exactly how I caught my last trade. This was well, this wasn't my last trade, but this was my trade I made the other week. Daily time frame. The market came up to this point. Guys, I was not expecting this market to break this level. Not at all. All right, because I was expecting it to do what it did right here. So what I did was put an entry in the middle when it hit the top. And I just let it trigger me, and it triggered me and dropped quick. All right, now this looks like a breakout, but again, you can put your entry in the middle, just like I said, and watch the C. Let it show you, let it prove it to you. If it's a breakout and you trade breakouts, then why are you trading what I'm telling you right now? Either you're catching this now and taking that risk, or you're waiting. All right, there's better opportunities than those kinds of trades. Those trades will break you. I trade breakouts in the beginning of my career, lost a $5,000 account, like boom, 3 months, I believe. What were we on? Euro CAD, probably, right? Yes. I used to trade breakouts, and the reason I started trading breakouts was because I had a great breakout trade. I was like, dang, it's this easy? I don't think another breakout trade worked for me my whole time, and I lost all my account, $5,000, and I lost it in 3 months. Never lost another account though. But the thing with this is you might be able to catch the bounce off of this level without the zone trade. If you watch Williams percent R, you might want to go to the 4 hour right now, because as soon as the market hits that level on the daily, you want to go to the 4 hour and start monitoring that for this trade. So keep your eye on this. And I told people the only way you're going to catch these, you would never know this was here right now unless you do this. Put an alert right there. And now you would have got an alert today, and it would have said where the market was, and you would have came and look at this. But other than that, you don't know where this is unless you happen to come look. And if you're not looking, you miss it. All right, traders. So I hope this video helped you out a little bit, helped you to understand about trading these support and resistance levels, which are range levels pretty much. You don't really want to take the breakout trade every time you see it happening, because you're going to get caught up in some bad trades. And I just showed you some very bad trades you would have been stuck in. And next time I'll show you how to recognize if the trade is going to break or not using the Williams percent R. Nothing's guaranteed, but you can always get yourself in a higher probability trade setup. And that's the main goal that I try to help people to do. So once again, visit my website. This is our members page, and this is our courses and so forth. So you get to come in here and become a member. If you become a member for 1 month, got our recent videos, and then our calendar of events. All right. Until next time, guys, have a great one. God bless.